Hello everyone, welcome back to Upside Down Data. Today I want to give an update about our risk indicator for Harmony and its native token 1. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So the last time that we put out a video about Harmony was a couple weeks ago. It was November 2nd, and since then, we've gotten in some more price action. So I want to give an update about what's been going on with the price action of Harmony and what our risk indicator has been making of those changes. So what I'm showing you here is a graph of Harmony's price action over its entire lifespan. And so each dot is a day, and each day is color-coded based on the output of our risk indicator, the UDPI. So score of 5 is high risk, score of -5 is low risk. And if you watched the previous video, you'll have seen our overview of this. Essentially, the UDPI identifies these low-risk zones where acquiring one has been historically advantageous, as well as these high-risk zones, these tops, where distributing or selling one may have been advantageous. And so more recently, kind of coming out of the summer, which the UDPI identified as being a low-risk period, we put in this massive leg to the upside. One broke its previous all-time high, as it has been pushing higher before now coming to this bit of a correction or consolidation where we are now. And of course, today we had a nice bit of a pump. I think it was up about 13% in the last 24 hours, last I checked when I'm recording this. So a nice little leg up to the upside after this correction that was kind of spurred by Bitcoin losing its footing and falling down a little bit. So what I want to talk about is what the UDPI kind of thinks of this recent price action and where it thinks the risk-reward ratio for one stands right now. Is there more upside or downside potential for one in the current moment? So I think an easier way of looking at this is to just look at the raw output of the model and see where it says we are now. So this is the UDPI output over time. And what you can see is that coming out of the summer, we were in this super low risk area, below -4, shot up to around 1, kind of got rejected off that level or kind of fell off the level, had a bit of a correction, came up to it again, and then have fallen off a bit since then. And so currently the UDPI is still above 0, so it thinks that there's a bit more downside potential than upside potential currently for one, but it's a fairly even ratio, right? It's not too bad. And it's actually been cooling off as one has kind of corrected a little bit. And something we talk a lot about on this channel, and I'll repeat again here, is that you have to take this information in context, right? If you think that we're in a bull market, if you think that one is going to be in an uptrend for a while, if you think its price is going to keep appreciating, then a score of 0 or 1 is not scary like it would be if you were in the middle of a bear market where you thought that one's price would be falling. If you think that one's in a downtrend, it being at a 1 risk level might be kind of scary because you would expect it to maybe be more in the negative ranges if it's in a bear market, kind of to be falling to these deep negatives we've seen before. Whereas if we're in an uptrend, if we're in a bull market, then a score of 1 isn't especially scary because we've got all this room left to the upside. There's all this other room that's kind of there. And so your interpretation would change. So to say that the UDPI is a little bit above 0 right now is not trying to cast FUD or to say that one is going to be crashing down to these levels anytime soon, because there's just historically not really a whole lot of evidence for that. If we're in a bull market, when we've been in a bull market before, we've gone up to these higher level risk zones. So unless we think that this time is different for some reason, it's reasonable to expect that there could still be a lot of upside potential to realize. So if your thesis is that one is going to be improving, hanging out at around 0 is not a bad thing. In fact, it's actually probably a good thing. It means that even though we're in an uptrend, look at all this room that we still could have left to the upside if we continue to move up. And that's bullish. It would be bearish. It would be not great if we were in an uptrend and we were up here in these really high risk zones. That would be concerning because historically that's marked kind of a top where a deeper correction is followed. But right now we're not at that level, and so it's not especially scary, maybe. So again, not financial advice. You should form your own opinions about these things. But that's just the way I interpret this. That I personally think that one will keep appreciating in price. We're in an uptrend in the crypto market generally. I see no reason why one shouldn't also be able to go. It's also got a lot of development and a lot of fundamental reasons that put it in a good position. So I don't really see much reason to expect that one should be different from the rest of the crypto market. And in fact, one, depending on what happens, could do quite well going on from here. And the UDPI thinks that that's possible. It's giving a lot of room to the upside that one could potentially move in the future. So of course, obviously, this is not to say anything about immediate short-term moves. Really, one's fate in the short term is a little bit tied to what Bitcoin does right now. Bitcoin had that correction. We've kind of had a good day yesterday where we were able to bounce back a little bit, but it's still unclear if that correction's over or if Bitcoin might kind of falter again. Maybe have to retest some of those lower prices that we've seen recently before it's ready to recover. And I would expect that if Bitcoin does correct again down to like 53K, for example, I would expect one to also correct as well. I don't necessarily think that one's going to do all that well if Bitcoin is correcting. But once Bitcoin reestablishes its footing, then I'd expect that maybe one could restart its merry way kind of to the upside potentially. Now again, you can't take any of that, make that too definitive because we don't really know what's going to happen. But that would just be my expectation of what could occur if Bitcoin kind of regains its footing. That's when I'd expect one to maybe be able to start putting in its moves back to the upside, maybe break its all-time high and move even higher, etc. And of course, with the expectation that one's going to appreciate in price over the bull market, we do expect it to break its all-time high that it put in not too long ago and to be able to really move a lot further to the upside. That would be expected in an uptrending general crypto market. So one thing that I think is interesting about Harmony, and I've been talking about this in several videos in the past, and I'll talk about it again here. It's the idea that a narrative in the crypto market right now is this idea that people want to use decentralized applications. People want to use things like DeFi and like NFTs and things like that. And for the longest time, that was completely dominated by Ethereum, right? Ethereum kind of held the market almost completely, had the entire market under wraps. And so I pulled these charts off of DeFi Llama, which is a great tool for just looking at DeFi allocation across different blockchains. So this graph over here is showing you the total value locked in DeFi in dollars. And this is showing the percentages within that market cap, so which blockchain is dominating. And this kind of dark green color here is Ethereum on this chart. And what you'll see is that Ethereum, for a long time, had kind of been dominating the whole DeFi market. It dominated the whole market cap. But more recently, we've seen it to start to lose market share to other competing blockchains like Harmony. And this is something I think is interesting because one of the big narratives in crypto right now is the idea of Ethereum being kind of unusable to normal people. The gas fees are so high, the transaction fees are so high, normal people just can't afford to use it. Normal people can't afford to spend $100 for a single transaction. So all that DeFi and a lot of the NFTs on Ethereum are kind of locked out, or a lot of normal people are kind of locked out from DeFi and NFTs and things like that on Ethereum because it's just too expensive. People just can't afford it. And so probably part of the reason we've seen these competing layer 1 blockchains that have their own DeFi ecosystems, their own NFT platforms, part of the reason maybe we've seen the market start to value those more is this realization that Ethereum alone can't cut it. It's just too expensive for most people to use, and we need these other platforms that are going to be more scalable and cheaper for people to use. And so that's maybe partly why a blockchain like Harmony has been doing quite well more recently. This idea that Harmony does have its own DeFi ecosystem, does have its own NFT ecosystem. There's development that's happening on it. And so the idea is that if that continues, potentially, if Harmony is able to kind of continue to grab up DeFi market share or NFT market share, bring more demand to its blockchain, we might see it potentially go the way of something like AVAX, which has really been exploding recently, or before that, Solana, which was kind of a similar story, where Solana exploded probably on the back of kind of its DeFi ecosystem that was growing and its NFT ecosystem that are a lot cheaper than Ethereum. So personally, for the long term, for the more macro kind of term for me, one of the things I'm looking at with Harmony is to watch its development in these areas. Is it able to grow out its ecosystem to DeFi, NFTs, and then just beyond? Obviously, DeFi and NFTs are not the only use cases of Harmony. These layer 1s have tons of applications within the Web3 space more generally. So one of the things I'm personally watching for is how that development will continue. And if Harmony is able to grab more of that market share, bring more demand to its platform, it very well could go the same way as something like AVAX or one of those. Now, obviously, we don't know what's going to happen. You can't be too definitive, but hopefully that'll happen. And the other thing that's important to note with crypto as well is the importance of things like network effects. One of the reasons potentially why Solana or Avalanche have gone so extreme is that they do have pretty good networks. They have a lot of people who believe in them, a lot of people who follow them, and that also helps, having that community that's established. Another example I think is useful to point at for this point is look at Cardano or ADA. That blockchain's only recently put out smart contracts, but it's got such a massive community behind it, such a huge network, that it stayed as one of the highest market cap cryptos for quite a while. You know, it's still well in the top 10, it still has about I think a $60 billion market cap last I checked, and it doesn't have nearly the ecosystem of some of these other platforms that are lower down on the rankings, and probably one of the reasons is this network idea. And that's another strength that Harmony might have, is that Harmony does have a pretty good network. A lot of people believe in it, a lot of people are passionate about it. So that's another thing that I'm watching as well. If that network continues or continues to grow, maybe that will bring some demand, more demand into the Harmony ecosystem that could appreciate the price. Now, those are just some things to think about. You know, who knows what's going to actually happen? So, you know, none of that's financial advice. You should form your own opinions of where you think Harmony is going. But those are some of the more macro, kind of bigger picture things that I'm looking at with Harmony, and in conjunction with the UDPI indicator. And the idea is that if the UDPI would be pretty low risk, and I would see these kind of macro trends going in Harmony's favor, I might be even more bullish on the project, because it might mean more demands coming in at a point where the upside potential is quite large, and that might allow the price to really catapult. So we'll see what happens, but these are some things I'm thinking about with Harmony more recently. So to kind of wrap up the update from our previous video, so I put out the previous video on Harmony on November 2nd, and the UDPI was sitting at a 0.78, so again, a little bit more downside potential than upside, but relatively even, and the price was about 29 cents. What I think is really interesting to look at is now, over 2 weeks later, on November 20th, we look at the price virtually the same when I pulled this off of where it was when I'm recording this at 28 cents. But you'll notice that the UDPI is lower. The UDPI is now at 0.31, not 0.78. And so what does this mean? How does this make sense that the price is virtually the same, but the UDPI is lower? And really what this gets at, and it's something that's just the truth about crypto in general, you know, crypto being an upward trending asset, the idea that what is a high risk price at one point in time might be a lower risk price later in time. You know, we saw that when we looked at Harmony's price chart. You know, back in November of 2020, you know, it was way lower prices back then, and the UDPI identified as being low risk. But then again, when we got up to the summer, up there, the prices were way higher than they were in November, but the UDPI was low again. And the idea was that those higher prices were now lower risk at that point in time. You know, Harmony had matured, it had developed, it had gained market share. So those higher prices were now low risk based on where Harmony was, based on where relative or in comparison to where it was in November of 2020. And so that's how you can have this kind of thing happen, where essentially what's happening is that the model sees a 28 cent Harmony today as being more favorable than a 29 cent or 28 cent one back November 2nd. And so that's what's happening. And the idea is that with these bull runs, as we're in these uptrends, time is your friend, time's on your side if things are trending upwards. And so therefore, even just in a period of a couple weeks, the same price can actually look more favorable at that later point in time than it did at that earlier point in time. And so essentially what's happening is that as Harmony is correcting and kind of consolidating, the model's becoming more bullish on it. It thinks there's more upside potential that's being accrued, that's possible now with Harmony than there was back then. And of course, on larger time scales, you know, we saw this massively coming out of the spring into the summer, where Harmony had really spiked up, tapped out its upside potential, corrected way down, spiked. Then at those price levels, the UDPI said low risk, and then Harmony has now broken past that previous all-time high from the spring, but it hasn't gotten back up to the super high risk zones. And again, this idea that now these price levels aren't as scary as they were maybe back then because of how Harmony has been developing, has been maturing as an asset. And so I think this is just a bullish signal. And kind of the longer that Harmony hangs out in these price ranges, the more bullish the model will likely become on it, and the more favorable the risk-reward ratio for the asset. So again, not financial advice, but just something that's interesting, I think, when comparing the UDPI levels across these different price points based on time. And so the final thing I want to note is just where Harmony now sits kind of relative to a bunch of other assets we've been tracking across the crypto space. So if you've been following the channel, you know that we've been adding risk indicators every week, and we'll continue to do so. So follow the channel if you want to see those as they come out. We're up to 19. And as you can see, you know, one is a relatively neutral right now, kind of neutral-ish risk reward. And it's kind of in the middle. So there's some that are a little bit higher. So assets like DOT that are, which is the most risky right now. Engine also had put in another run, so it's a little bit higher up there. But The UDPI also thinks there's some other assets that maybe are a little bit lower risk right now. But again, the idea is that you need to interpret these in context. And if you have a really strong thesis about one, if you think that Harmony is going to explode soon, then maybe a risk level of 0.32 is about as low as you expect it to get to. Maybe you don't expect it to be able to get down here because you think it's going to be exploding so much to the upside, and you think that more of this part of the gauge is in play. And so that's really up to you to make your own decisions of do you think that one is capable of going back to these really low risk zones before it makes this next move to the upside, or do you think that it's just going to take off too soon and really go nuts? That's up to you to decide. But I think overall what the UDPI is saying is that this is a point where you can kind of put your own interpretation on it because it's kind of in the middle. It's not these clearly low risk zones where there's no interpretation necessary, or these clearly high risk zones where there's no interpretation necessary. It's a little bit more in the gray area here. And so it's really up to you to make that interpretation. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with UDPI, we're all going to make it.